Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast.
Ozcast.
Simply head to ozcastnetwork.com for details.
Ozcast.
Okay, so imagine you're scrolling through X and you see Eric Trump.
Oh, wow.
Yeah, right?
Okay.
Giving everyone financial advice.
Yeah.
That's what happened this week.
Oh, wow.
And it caused a storm online.
Yeah.
People are talking about Bitcoin, obviously, but also the economy and even current presidential policies.
It's wild how a simple post online
Right.
can get everyone riled up like that.
Exactly. And that's why we are doing this deep dive today.
I'm excited.
You sent over this article from cryptonews.com.
Yeah?
It's titled, Eric Trump Tells Followers to Buy the Dip Amid Bitcoin Drop.
Mm-hmm.
It was published February 25th.
Okay.
So super recent.
Very fresh.
Yeah. And we're going to unpack it, all the reactions, the context, what it all means for our understanding of this crazy world where crypto meets politics.
Yeah, it's like this one little story can tell us so much about what's happening in the markets right now.
For sure. So let's just jump right into it.
Let's do it.
The story's about Eric Trump's post on X, where he wrote, buy the dips, along with the Bitcoin symbol. This was right after Bitcoin dropped below $90,000.
Oh, wow.
Which is a big drop from its recent record high of $109,000.
Yeah, that's a substantial drop.
Yeah.
So what happened?
Oh, it was instant.
Okay.
A wave of replies. Some people seem to take his advice at face value.
Mm-hmm.
Maybe they think he's like a good investor.
Right, they trust him.
Yeah, but a lot of people were critical.
I bet.
Especially because of President Trump's economic policies.
Right. All the baggage.
Yeah.
Especially those trade wars.
Yeah, the trade wars for sure.
Everyone's talking about that.
Some of the replies were brutal.
Like,
One person said it was a bloodshed crash caused by the tariff and trade war.
oh, wow.
Others were like, how can we buy the dip when we have to pay the bills?
Right.
Which is a good question.
Yeah, how can you?
And then my favorite,
What's that?
didn't you say this 30% ago?
Oh, what?
Highlighting how much Bitcoin had already fallen?
Oh, chill. It's got to sting a little bit.
Yeah, it's interesting to see how financial advice, even from someone like Eric Trump,
Yeah.
gets filtered through people's own money anxieties and political views.
It's fascinating, right?
Yeah.
You see their own biases and experiences coming through.
It really shows how sensitive people are about their money,
For sure.
especially when the person giving the advice
Mm-hmm.
is so closely connected to policies that might be affecting the market.
Yeah, exactly.
Yeah.
And this is where things get really interesting.
Okay.
The question of whether or not to buy the dip
Mm-hmm.
depends on the bigger picture.
Yeah.
You know,
Yeah.
market sentiment, the impact of the trade wars,
Mm-hmm.
and the unpredictable nature of Bitcoin.
Right. Bitcoin is kind of a wild card.
He always keeps us guessing.
So should people actually listen to Eric Trump?
Well, let's look at the data.
Okay.
The Bitcoin Fear and Greed Index,
Okay.
which measures how investors are feeling,
Yeah.
is currently at 25.
25. What does that even mean?
That puts it firmly in extreme fear territory.
Extreme fear.
Yeah, so basically investors are super cautious, even a little panicked.
Oh, wow.
But here's the thing.
Okay.
Historically, times of extreme fear
Mm-hmm.
have often been followed by rebounds in the market.
Interesting. So is Eric Trump right?
Hold on.
Okay.
Research from Glassnode shows that on average, Bitcoin has a 6-month return of over 50% after the index drops below 30.
Okay. So maybe he is onto something.
Maybe, but we got to be careful.
Yeah.
Past performance doesn't guarantee future results.
True.
The recovery time can be really different depending on a lot of things.
Like what?
Well, you know, those economic conditions and regulations.
Yeah, right.
And you know how they're tied to the current administration.
For sure. And that brings us back to President Trump's trade policies. He recently doubled down on tariffs against Canada and Mexico.
Right.
And a lot of people think those tariffs are a big reason for all the economic uncertainty.
It makes sense.
Yeah, and that uncertainty affects Bitcoin's price.
It's complicated.
Okay.
On the one hand, tariffs can slow down the economy and make less money available for investment, which obviously puts downward pressure on crypto prices.
Makes sense. Less money going around means less money going into Bitcoin.
Right. But there's also research from the IMF.
The International Monetary Fund.
Yeah, that's the one.
Okay.
They found that these trade tensions can sometimes actually boost crypto adoption.
Wait, really?
Yeah.
Why would that be?
Well, think about it. If normal ways of paying for things get disrupted
Yeah.
because of the trade wars,
Okay.
businesses and people might start looking for other options.
Right.
Crypto could become more appealing.
So like a temporary safe haven.
Exactly. It's an interesting idea from the IMF.
Yeah.
Trade wars, although generally bad for stability, could actually speed up crypto adoption in the short term.
So silver lining, I guess.
Yeah, but overall it seems like trade wars that last a long time are still bad news for crypto.
Yeah, that makes sense.
And then there's President Trump's own policies towards crypto,
Right.
which add another layer of complexity.
It's kind of paradoxical, isn't it?
He wants to make the U.S. the crypto capital of the world,
Right.
but actual progress on regulations has been slow.
Yeah. You're not wrong.
Okay.
Just last month, he signed an order to create a task force to look into crypto regulations.
Okay, so who's on this task force?
It's made up of people from all the big federal agencies
Okay.
and regulatory bodies like the SEC and CFTC.
So what are they supposed to do?
They have a lot to do, actually.
Right.
Review existing regulations, propose reforms, and ultimately create a single federal framework for cryptocurrency.
Sounds like a lot of work.
Yeah, it is.
What are they looking into specifically?
They are looking at a bunch of things.
Like what?
Figuring out which agency controls what, making sure investors are protected, and even looking at how to tax cryptocurrency.
Okay, so a whole bunch of important stuff.
It is, but here's the thing.
Okay.
They're just advisors.
What do you mean?
They can't actually make any changes themselves.
So what happens?
Their recommendations go to the president and Congress
Okay.
for approval. So a lot depends on what the administration decides to do.
Exactly, and that's what's causing so much uncertainty in the crypto community.
Yeah, that makes sense.
People want to know if President Trump's policies will actually be good for the industry in the long run.
I see. Okay, so while we wait to see what happens with regulations, there's another big factor we have to consider.
Yeah.
Bitcoin's volatility.
Right.
It's famous for its huge price swings.
It can make anyone nervous.
Totally. So tell me more about this volatility.
Well, if you look at data from Coinmetrics,
Okay.
Bitcoin's 30-day volatility index during those big bull markets in 2017 and 2021 was often over 100.
Wow.
But lately, even though there have been big price moves, it's stayed below 80.
So what does that mean?
It means the highs aren't as high and the lows aren't as low.
Okay, I'm following you.
So what's causing this relative stability?
Yeah, is Bitcoin finally calming down?
It's probably a mix of things,
Okay.
but one of the biggest is that the market is maturing.
What does that mean?
Well, Bitcoin isn't this niche thing anymore.
Yeah, it seems like everyone's talking about it.
Right. As the market grows up,
Mm-hmm.
you usually see less volatility,
Okay.
more people involved, more money flowing, less room for crazy price swings.
That makes sense.
And there's another piece to this.
What's that?
Institutional investors are getting involved.
Like who?
Hedge funds, asset managers, even some regular companies.
Really? So they're putting money into Bitcoin?
Yep.
But aren't they supposed to be all about avoiding risk?
You'd think so, right?
Yeah, why would they invest in something as volatile as Bitcoin?
Well, they're after those big returns.
Okay.
And remember, even though Bitcoin is more volatile than traditional things,
Yeah.
it's also shown it can bounce back from drops.
So high risk, high reward.
Exactly. And here's the really interesting part.
Okay.
As more of these institutional investors get involved,
Uh-huh.
their trading and their strategies can actually help stabilize prices.
Really?
They're less likely to panic sell when the market dips.
Right.
And they're looking at the long term, which helps smooth things out.
So the more they invest, the less volatile Bitcoin becomes, and then that attracts even more investment?
Yeah, there's definitely a cycle there.
Wow.
But don't get too excited.
Okay.
Bitcoin's price is still influenced by so many things.
Right. It's not like a guaranteed thing.
Exactly. Market sentiment, new tech, what's happening with regulations, the global economy, even what's trending on social media.
So even though it's growing up,
Yeah.
it's still kind of a roller coaster.
It's a roller coaster with slightly smoother tracks.
Okay. I like that analogy.
It's still exciting and unpredictable.
For sure. So we've covered a lot.
We have.
But what does it all mean for someone like me or anyone listening who's thinking about investing in crypto, especially Bitcoin?
That's a great question.
Yeah.
It really shows how important it is to look at the big picture.
Okay.
When you're dealing with this market,
Mm-hmm.
it's not just about the tech or the price.
Right.
It's about understanding the whole context.
Like what?
Politics,
Yeah.
the economy, the rules, and even what people are saying about it all.
It's more than just following Eric Trump's advice on X.
Exactly. This deep dive is about giving you the tools to be a smart investor,
I like it.
to understand what shapes the crypto world, and to make decisions that fit your goals and how much risk you're okay with.
Well said. So should our listeners buy the dip?
That's up to you to decide after thinking about everything we talked about today.
Right. We are not giving financial advice.
Right. We're here to give you the information you need to make good choices.
It's all about thinking critically, doing your own research, and understanding this really complex market.
It's constantly changing.
Yeah. And on that note, I think it's time to dive a little deeper into some of those unresolved regulatory challenges.
Definitely, those are only going to become more important as crypto gets more popular.
Yeah, for sure. Let's take a quick pause, and when we come back, we'll explore those challenges in more detail and try to figure out what they mean for the future of digital assets. Welcome back. So before the break, we were talking about that Eric Trump buy the dip tweet and how politics, the economy, and crypto are all kind of tangled up.
Yeah, it's a messy knot for sure.
Right, and one thing that really stuck with me was all the uncertainty around regulations.
That's a big one.
Yeah, I mean, President Trump talks about making the U.S. a crypto capital, but there are so many unanswered questions still.
You've hit on a really crucial point there.
Yeah.
For all the talk about being pro-crypto, there are these major regulatory roadblocks that haven't been dealt with.
Like what kind of roadblocks?
Well, maybe the biggest one is this basic question.
Okay.
Are cryptocurrencies securities or are they commodities?
Okay, so explain that to me like I'm 5.
Okay, sure.
What's the difference?
So the difference matters because the answer determines who gets to make the rules.
Okay.
If cryptos are securities, they're under the SEC.
Okay, the Securities and Exchange Commission?
That's the one.
Okay, and if they're commodities?
It's the CFTC.
The Commodity Futures Trading Commission?
Yep.
Okay, so which one is it?
That's the million-dollar question, and unfortunately, there's no easy answer. The whole regulatory scene is kind of a mess right now.
A mess? How so?
You've got the SEC and the CFTC both saying they have authority over parts of the crypto world.
Oh, wow, so they're fighting over it.
Kind of, and sometimes their views even contradict each other.
So it's confusing.
Very confusing.
I can see how that would make businesses nervous about getting into crypto.
Absolutely. Imagine trying to play a game where the rules keep changing.
Yeah.
Or nobody can even agree on what the rules are.
Right. No one wants to play that game.
Exactly. It doesn't exactly inspire confidence.
No, not at all. It seems like clear rules would be really important for attracting those big institutional investors that everyone's talking about.
You're absolutely right. Those big players need to feel confident about the rules before they're willing to put in serious money.
Yeah, that makes sense. And this regulatory uncertainty is just one piece of the puzzle, right? There are other challenges that need to be figured out.
Definitely.
Like, what else is there?
Well, another big one that keeps coming up is regulation of stablecoins.
Stablecoins, right? Remind me what those are again.
Sure. So think of stablecoins as a bridge between the traditional financial system and the crypto world.
Got it.
They're cryptos designed to hold a stable value,
Okay.
usually pegged to a regular currency like the US dollar.
Oh, okay. So like a digital version of a traveler's check.
Yeah, that's a good way to think about it.
I've heard of Tether. Is that a popular stablecoin?
Exactly. Tether is a great example.
Okay.
But here's the thing.
What?
Even though they're becoming super important in the crypto world, the rules around stablecoins are still really undeveloped.
So another gray area.
Pretty much. And then you have all these other areas where the rules are just unclear.
Like what?
Like cross-border compliance.
Cross-border compliance.
Crypto, by its very nature, crosses borders.
Yeah, it's global.
Right. It's digital, global, decentralized.
Makes sense.
But that creates a nightmare for regulators.
I can see that.
Regulators are used to working within specific countries.
Right.
But with crypto, those lines get blurry.
Yeah, that's tricky.
It's a huge challenge for them to enforce rules and stop things like money laundering or tax evasion.
Right, because the transactions are happening all over the place.
Exactly. And then you add DeFi into the mix.
DeFi?
DeFi stands for decentralized finance.
Okay.
It's basically a whole bunch of financial apps built on blockchain.
Okay, I'm following.
But here's the key. They cut out those traditional middlemen like banks.
Whoa, so it's like a parallel financial system.
You got it.
Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast.
Ozcast.
Simply head to ozcastnetwork.com for details.
and it's growing incredibly fast.
Wow, that's amazing.
It is,
Uh,
but it's also a big headache for regulators.
because they don't know how to regulate it.
Exactly.
Yeah.
It's all so new and changing so quickly.
So we've got stablecoins, cross-border transactions, and DeFi all pushing the limits of traditional regulations. Is there anything else?
Well, there's one more big issue.
Okay.
The environmental impact of crypto mining.
Oh, yeah, I've heard about that.
We've all heard the stories about the massive amounts of energy used for Bitcoin mining.
Especially the proof of work kind of.
Exactly. And the administration hasn't really said anything clear about this.
So it's another area where we're waiting for guidance.
Exactly. Some countries are cracking down on mining because of the energy use and carbon emissions.
Yeah, that makes sense.
It'll be interesting to see what happens in the U.S.
Okay, so we've got this whole list of regulatory issues and unanswered questions.
It's a lot to sort through.
What are the experts saying about all of this?
Well, the general feeling is that despite President Trump's pro-crypto talk,
Yeah.
these gaps in regulation could actually slow down mainstream adoption.
Why is that?
Because businesses and investors need clear rules.
Right, they need to know what they can and can't do.
Exactly. Without that certainty, they're more likely to hesitate.
And not fully embrace crypto.
Right.
So it's kind of a waiting game.
Yeah, I guess you could say that the crypto world is watching to see how the administration handles all of this.
Okay.
The outcome will have a huge impact on the future of digital assets in the U.S.
Yeah, that makes sense. It's a pivotal moment, and it's a good reminder that crypto is exciting and full of potential.
For sure.
But it's also tied up with these political and regulatory realities that we can't just ignore.
You're absolutely right. If you want to make smart decisions in the crypto world, you
Well-
can't just focus on the tech and the market trends.
Okay.
You have to understand the politics and the regulations too, because that's what shapes the whole playing field.
Okay, so we've unpacked the regulatory challenges, but there's another piece of the puzzle that we need to go back to.
What's that?
Bitcoin's volatility.
Ah, yes, the roller coaster ride.
We all know it's famous for those wild price swings.
It can be a wild ride.
But you mentioned earlier that Bitcoin might actually be becoming less volatile.
Yes, it's an interesting trend. Bitcoin is still much more volatile than traditional assets,
Right.
but it has shown signs of getting more stable compared to its earlier days.
So less of a roller coaster and more of a bumpy road trip.
Maybe something like that. If we look at the numbers, Bitcoin's 30-day volatility index during those 2017 and 2021 bull markets was often over 100, but recently, even with some big price moves, it stayed below 80.
So the highs aren't as high
Right,
and the lows aren't as low.
exactly.
Interesting. So what's behind this move towards stability?
Well, a couple of things are happening, but one of the most important is probably the fact that the market is maturing.
Okay, what does that mean?
It means Bitcoin isn't a niche asset anymore. It's gone mainstream. And as the market gets more mature, we usually see less volatility.
Because there are more people involved?
Exactly, more participants, more liquidity, and that leaves less room for those crazy price swings.
Okay, that makes sense. So as Bitcoin becomes more established, it's likely to become less volatile.
That's the general idea.
Okay.
And another important factor is the increasing involvement of institutional investors.
Right, we were talking about those hedge funds and asset managers. Exactly. They're starting to invest in Bitcoin, and these are sophisticated players with a lot of money and a long-term perspective. But I thought they were supposed to be risk-averse. Why would they be attracted to something as volatile as Bitcoin?
Well, they're weighing the risks and the rewards. They see the potential for big returns.
Okay.
And even though Bitcoin is more volatile than traditional investments, it's also shown that it can recover from downturns.
So they're willing to take on more risk because they think the potential payoff is worth it?
Exactly. And here's something interesting. As more of these institutional investors come into the market, their activity and their strategies can actually help to stabilize prices.
Really? How so?
They're less likely to panic and sell when the market dips, and their long-term view can help to smooth out some of that volatility.
So it's like a cycle. The more they invest, the less volatile Bitcoin becomes, which then attracts even more institutional investment.
There's definitely an element of that, but it's important to keep in mind that Bitcoin is still a relatively young asset, and its price is affected by a lot of different things.
So it's not a guaranteed thing.
Right. We have to remember that Bitcoin is still sensitive to things like market sentiment, technological changes, new regulations, global economic trends, even what's trending on social media.
So it's still a dynamic system.
Very much so.
Okay, so even though Bitcoin is showing some signs of maturity,
Right.
it's still a bit of a roller coaster.
Let's just say it's a roller coaster with slightly smoother tracks.
Okay, I like that analogy. So we've talked about regulatory uncertainty and the changing volatility of Bitcoin.
Two complex issues for sure.
Definitely. But for someone who's new to all this, what does it all mean? What's the takeaway for someone thinking about investing in crypto, particularly Bitcoin?
I think the most important thing to remember is that the crypto market is not for the faint of heart.
Okay.
It requires careful thought research and a willingness to take on risk.
Right. You got to be comfortable with the ups and downs.
Exactly. There are potential rewards, but there are also real risks.
And it's important to do your own research.
Absolutely, no matter what you see trending on social media or what someone like Eric Trump might say.
Right. Don't just blindly follow the hype.
Exactly. Take the time to understand the technology, the different types of digital assets, the risks and rewards, and the big trends that are shaping this space.
And think critically about all the information out there, right?
Yes. There's a lot of noise and opinions and conflicting information you need to be able to sort through it all and form your own educated view.
Because at the end of the day, you're the one making the decisions.
Precisely. And it's not just about individual research and education.
Okay. What else is there?
It's about talking to people who have different perspectives on crypto.
Right. Getting a variety of viewpoints.
Exactly. Share your knowledge and your concerns. Because ultimately, the future of crypto will be shaped by the choices we make individually and as a society.
So it's bigger than just me or you.
It really is. It's about all of us working together to figure this out.
So coming back to that question, should our listeners follow Eric Trump's advice and buy the dip?
Well, we're not here to give financial advice.
Right. We're all about giving our listeners the power to make informed choices.
Exactly. And that's what this deep dive has been all about, giving you the knowledge and insights you need to navigate this crazy world of crypto.
We've explored the opportunities, the challenges, the uncertainties, the potential. It's a lot.
It is, but it's also incredibly exciting.
For sure. So in the end, the decision of whether or not to invest is a personal one.
Absolutely. But no matter what you decide,
Yeah.
equip yourself with knowledge, talk to people, and make choices that align with your values and goals.
Because the future of finance could be shaped by the decisions we make today.
Well said. And on that note, I think it's time to dive into the final part of our deep dive.
Sounds good. Let's take a quick break, and when we come back, we'll wrap up this episode with some final thoughts on the future of crypto and what it all means for you. Welcome back to the deep dive. It's been quite a journey.
It really has.
From that Eric Trump buy the dip tweet to all the worries about trade wars to this whole regulatory maze that crypto seems to be stuck in.
It's a lot to unpack.
It is a whirlwind tour of everything happening in the crypto world right now.
But I think we've shed some light on the forces at play.
Absolutely. And now for the big question.
The big so what?
Yeah, what does all this mean for the future of digital assets?
Well, if there's one thing to take away from today,
Okay.
it's that crypto isn't in its own little bubble anymore.
Right. It's connected to everything.
Exactly. It's all intertwined with the global economy, political decisions, and those changing regulations.
So it's bigger than just the technology.
The tech is still the foundation, of course.
Yeah, of course.
But it's becoming clear that the future of crypto depends on things that go way beyond code and algorithms.
We're talking mainstream adoption, clear regulations, integration with the current financial system, global acceptance.
All of that and more.
It's exciting and kind of scary at the same time.
It is. We're seeing this clash of worlds, you know?
Oh, yeah. Explain that.
This decentralized, borderless, disruptive nature of crypto is bumping up against the traditional world of finance and government.
The old guard.
Exactly, a world that's not always quick to change.
It's a battle of the titans.
In a way, yes. And the outcome, well, it's hard to say.
It's unpredictable.
Exactly. But the stakes are high.
Yeah. What are the stakes?
The potential for crypto to change finance, empower individuals, and create new economic opportunities is huge.
But there are risks too, right?
Of course, we can't ignore those.
Yeah, we've talked about the volatility, the unclear regulations, the potential for misuse, the environmental concerns.
All valid concerns, but there's also this feeling that crypto is here to stay.
It's not going away.
Right, it's becoming too integrated into our digital lives.
So where do we go from here? What's the path forward?
Well, I think our conversation today has given us some clues.
Okay, like what?
First, stay informed.
Yeah, keep learning.
The crypto space changes so fast.
It does. New technology, new regulations, markets going up and down. It's a
Yeah.
lot to keep track of.
It is staying up to date is more important than ever.
So don't just rely on what you see trending on X or what Eric Trump is saying.
Exactly. Do your own research.
Don't follow the hype blindly.
Right. Take the time to really understand things.
Understand the technology, the different types of digital assets, the risks, the rewards, the big trends.
It's about being an informed investor.
And being critical of the information you see, right?
Absolutely. There's so much information out there, you need to be able to filter it and form your own opinion.
Because there's a lot of noise out there.
There is, and it's not just about individual research and education either.
Okay, so what else is important?
Talking to people who have different opinions on crypto.
Yeah, hearing different perspectives.
Right. Share what you know and what you're worried about.
Have those tough conversations.
Exactly. Because in the end, the future of crypto depends on the choices we make together.
It's a collective effort.
It is. We all have a role to play in shaping this future.
It's not just about buying the dip.
No, it's bigger than that.
It's about seeing crypto as more than just an investment.
Crypto has the power to change systems, change how we think, and empower people in ways we're just starting to grasp.
That's a powerful thought, and it brings us back to that question, should our listeners buy the dip?
We were not giving financial advice.
We're all about giving our listeners the information they need.
Exactly, to make their own decisions.
We've talked about the good, the bad, the confusing, and the exciting parts of crypto.
It's a complex world.
It is, but it's a world full of potential.
So whatever you decide,
Yeah.
arm yourself with knowledge, talk to people, make choices that feel right for you.
Because the future of finance might depend on what we do today.
Well said. And on that note, we'll wrap up this deep dive.
It's been a great journey. Thanks for joining us as we explored this fascinating world where crypto meets politics.
It's a conversation that's just getting started.
It is. Until next time, stay curious, keep learning, and keep exploring the ever-changing world of digital assets.
Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast.
Ozcast.
Simply head to ozcastnetwork.com for details.